guys. I'm not sure if you've had a chance to read the fundamentals that I post on the Discord fundamentals channel, but what I'm seeing is market in a sort of bit of a state of flux, not sure which way it wants to go. There's no clear direction just yet. We've got the US dollar doing these cycles higher, which would suggest that on this support level we should see another bounce, but I don't know if we're going to get that. I think we might fall, and we need to get through this level here around the 103.30 before you've got a lower low and can start to suggest that we're in a downtrend. Until then, we're still technically in an uptrend. But if the US dollar is going that direction, you'll see the euro come up and test this, although even though with this weakness in the US dollar, the euro hasn't really done much. It's been stuck in about 100-point range, whereas the pound and certainly the yen have moved a lot further, and even the Aussie. The Aussie's looking close to overheated. The pound is certainly overheated. The euro is nowhere near it. Yen is oversold, so how much more? It's moved pretty far, pretty fast, so how much more downside? The support levels across here, which is 200 pips away. So technically we're still in a buy US dollar situation, but fundamentally I think that's changing, and we'll be seeing a risk-off environment. So as I sort of touched on in the fundamentals, it looks like that the stock market is looking past the recession. Technically, we got a recession last week in the US, 2 negative quarters. Or perhaps that's the end of the recession, and the economy, which, if you listen to the White House, is still very strong, and jobs are still hot. And maybe the stock market's looking past that, and we've seen the bottom. And if that's going to continue to rally, and if inflation is still quite high, then you might get another rate hike. But inflation does look to be sort of peaking, and we might therefore buying US dollars doesn't really make sense from a safe haven asset, or from owning the bonds, which are starting to come off as the Fed will start to take the brakes off rate hikes, may even look to lower rates. And so owning the US dollar as a safe haven or as a yield bearing instrument from the US Treasuries, you get a better rate of return out of stocks. So I think that's where we're at fundamentally, but technically that picture doesn't match. Over in commodities, it's also a mixed bag. It is sort of creeping higher. Certainly natural gas ran higher and starting to fall back. Iron ore picked up but fell away on Friday. So commodity seems to be also a mixed bag. A roller coaster of a month, falling on fears and then rallying. It's no clear picture for either the commodity currencies as well. So a bit of a mixed bag, and that would sort of lead me to be trading just the shorter time frames, looking at something like the 15-minute, 5-minute or 30-minute charts, and trying to get in and out of the market really quickly. But the euro is just very choppy, so that's not ideal. The Aussie dollar also a little bit choppy, so also not ideal. And we've got the RBA this week expecting to raise rates. Will the Aussie dollar strengthen on the back of that? I don't really see that happening. It could, but to me it's more about what is the US dollar going to do at the moment, and that's not clear. and US dollars back at support level from this previous high in June. It's right on the 61.8 from that cycle. Probabilities are high that it'll bounce, but fundamentally I don't think that's going to happen. So I think we'll go down and test this low here around the 103.30, and that might provide you opportunities with buying the euro if it can break out of that range. All right, we'll keep an eye on it and keep it posted tomorrow morning. Thanks, guys.